You're watching Byline Wilmington on CBS 10 WILM. Here's your host, Don Ansell.
Rick Willits is our guest. He's the CEO of a cooperative bank. The banking crisis is our topic. What about these banking institutions, Rick, that are now deemed too big to fail?
Well, I think it's not just banking institutions. Obviously, AIG has been deemed too big to fail. The top 9 banks are Wall Street banks that were hauled into Treasury up front and told you will take the TARP money. We're being told you're too big to fail. So certainly those 9, I think, fall into that category. How far down the food chain that goes, I don't know, but certainly Bank of America, for instance, is deemed too big to fail.
Should institutions be allowed to become too big to fail?
You know, there's argument, and there's still a different, the American Bankers Association represents 95% of the assets of the banking industry. But there's a community bank organization called the Independent Community Bankers who wants to ratchet down the deposit cap. Right now, the deposit cap limit is no more than 10% of domestic deposits may be domiciled in one bank. They want to ratchet it to 5%. Well, there are now 3 banks that are over 10%. JP Morgan, I think Citicorp, and certainly Bank of America are all up around 11%. What that would do is basically cause you to dismantle those banks. I don't think that's likely to happen.
But if you get too big to fail, quote unquote, could that lead to some precarious business decisions? I mean, if you make a big mistake in judgment, what's the difference if you're too big to fail? If you do something reckless, what's the difference? We're too big to fail.
Well, that's a good question. I think one argument there is that a $1 trillion bank, which would be too big to fail, is more diversified and has their risk spread more geographically and is not going to be concentrated in one area. For instance, if Bank of America has a large line of credit out to General Motors, and General Motors does in fact file bankruptcy, I would dare say that Bank of America would not be hugely impacted because they're big enough to be able to absorb that sort of thing.
Talking about the auto industry, and there's been a lot of criticism about the no strings money that was given to Wall Street in the financial sector, but much harsher standards being applied to a bailout for the auto industry. Any comment on that?
Well, I'm not an expert in the automobile industry. I have a number of friends who are local dealers, and they're certainly biting their nails over this issue. And there is a lot of job loss locally if any of the big 3 were to go out of business. But I think what you're seeing there is a failed business model. They've got to get their overall costs, largely labor, more in line with their foreign competitors who have located largely in the South in right-to-work states and don't have these heavy union expenses. It looks like bankruptcy may be the only way to accomplish that. That's what the airlines had to do. The argument the big 3 automakers argue is nobody will buy cars if they're in bankruptcy because they don't know whether they can get them serviced or not. Well, I don't have an answer to that.
During all of this financial upheaval, cooperative stock has taken a pretty heavy hit. Any comment on that?
Well, I think it's trailed down with the rest of the bank stocks. And right now our book value is about $8.50 a share. We're trading at about $2.60 a share yesterday. So there's about a $6 gap between our book value and our market value. What the market's saying is we think you've got a lot more losses out there.
How do you think investors will look at bank stocks now? As a good deal on sale, or as a way to, or something that's too risky to buy right now? Well,
I don't know that I would go buy 100 bank stocks across the line, but I think certainly a selective group of stocks, you know, how much lower can they go, I guess would be the question.
What are you looking at in terms of a timeline for the recovery of stock, of bank stock, of your stock?
Well, I think the bank stock is going to recover in tandem with the overall economic recovery. There's going to have to be a tangible reason for investors to want to pay more for any bank stock. So really that comes with the recovery, and my crystal ball broke last year on that. I'm seeing it pushed further and further out. Most people tend to believe that 2009 is going to be at best more of the same. at worst worse, and no recovery is in sight till perhaps 2010. And I'm not even predicting that date. I'm just saying I don't see it any earlier than that. And it's going to be an uneven recovery. It's going to be uneven in different segments of the economy. It's going to be uneven in different geographic sectors. And this is one thing I think makes our region so good, is that the factors that attracted people here 2 and 3 years ago are still here. They just had a huge ice storm in the Northeast, and it was about 65 degrees here that day. So I think once things begin to loosen up, this region should recover faster than most.
I hate to say, but do you remember the ice storm we had in March several years ago?
I certainly do.
How hard is it for regional banks to compete in this environment with the mega banks?
Well, I think it's difficult simply because our sweet spot is small business. And small businesses, retailers, builders, car dealers are all hurting right now. So our client base is having difficult times. I think what separates us then from the larger banks is the one-on-one. We will sit down with the local hardware store operator, try to work with him on a plan that'll get him through this. I've coined a phrase I've used so much my wife is tired of hearing it now, but it's called "let's just get to the other side." And I think that's where most of us are at this point.
You're a third-generation banking executive. How difficult is this to go through for you?
Well, it's very difficult. People ask me if I enjoy work, and I said up until a few months ago, I actually look forward to going to work every day. But you know, life isn't always up on the high road. Sometimes you've got to be down in the ditch, and you work harder when you're in the ditch, perhaps for less result, but it works out in the end.
Do you think we've learned anything from all of this?
Well, I would hope so. As I mentioned earlier in the show, the Depression era folks grew up with a frugal attitude that the baby boomers didn't have. And I think we're all getting a dose of frugality right now, and that's probably not a bad thing.
We're almost out of time, but I do want to just touch on the American Bankers Association. You've just been elected vice chair. Next year you'll be chairman-elect and then chairman. Tell us what that organization does.
Well, its principal job is lobbying, and I spend a lot of time already in Washington meeting with congressmen, regulators, agency heads, people like that.
You met Bernanke?
I have.
Paulson?
I've met Paulson and just met Betsy Duke last week. I've actually known Betsy Duke. She was a past chairman of the ABA, and she's the newest member of the Federal Reserve Board. Have not been to the White House. That may happen at some point. I don't know.
But you get a good sense of what's happening in the industry through the ABA.
You do, and you're asked to testify before Congress. I testified before the House Banking Committee on flood insurance. And this was in the late 90s, and we had had 6 hurricanes in 4 years, and I had unfortunately become an expert on the subject.
We're out of time, Rick. Thank you so much. By the way, folks, if you'd like to see this program online, go to WILM-TV.com, and when you get to the site, click on the Byline Wilmington icon. That's WILM-TV.com. That's going to do it for today. Join us next week, right after Face the Nation, for more of the people and the issues that are the fabric of the Lower Cape Fear. I'm Don Ansell. Have a great week.
You've been watching Byline Wilmington on CBS 10 WILM. Join us every Sunday morning at 11 as we explore the issues that concern you.